Another very important and powerful pattern that I'm going to mention here is a shooting star. So basically, shooting star is something like a hammer that has been inverted, and instead of appearing at the end of a downtrend, you can find it at the end of a major or minor uptrend. But it doesn't mean that you cannot find such a candlestick shape at the end of a downtrend, but in that case, it's called an inverted hammer, which we will deal with in the next part of this video. So here you can see a shooting star at the end of a minor uptrend, which is actually a correction in a major downtrend. This is our major downtrend. As you can see, a shooting star has a long upper shadow compared to its main body, and ideally no lower shadow, or in this case, very small one, of course. The size of the main body shouldn't be more than 1/3 of its shadow, and in this case, it's even smaller. The color of the main body doesn't matter much, but it's better to be red. That indicates more bearish bias in the market. So here we see a shooting star forms at the end of something that looks like a correction. And this correction is in the direction of the major downtrend in the market. And it's very important for every trader that trades in the direction of the major trend of the market. As I mentioned before, if these patterns such as shooting star, gravestone, dragonfly appears after a price gap, they can be more powerful. And here you can see that before and after the formation of the shooting star, we have a price gap that doubles the credibility of this pattern. For more confirmation, you can use a stochastic indicator. As you can see, D% and K% lines have been in the overbought area for a short time. I mean, they were above the 80 line and then went below this line. So you can add this piece of evidence to your analysis as a strong confirmation. Another clue that can be notable here is the hidden divergence between these two fractals. Hidden divergence happens when the price makes higher lows, but indicators make lower low, or in this case when the price makes lower high, and indicators make higher high. So here hidden divergence confirms the major downtrend at the point where the pattern is formed. You can test this on different indicators such as RSI, stochastic, CCI, momentum, and all the results look the same. So after all of these confirmation, we can go short below this fractal and put our stop loss above the shooting star. And for your exit point, you can use price action and find support and resistance areas from the past or simply any other method that you prefer. Another reversal candlestick pattern that consists of two candles with different colors is called dark cloud cover. This pattern appears at the end of an uptrend that signals a possible trend reversal. The first candle in this pattern is a bullish and powerful Marubozu with a long main body and ideally no shadows. After that, a strong bearish candle opens above the high of the previous candle, but in the end, it closes somewhere in the middle of the previous bullish candle and ideally near its open price. As I mentioned before, you should not enter into a buy or sell position blindly after noticing a candlestick pattern. And as a professional trader, you must always look for other confirmation to give more strength to your analysis. I don't want to confuse you now with the Ichimoku cloud trading system because it's irrelevant to our subject. But I want to show you that when you combine different technical analysis tools properly, you will come up with golden opportunities like this, where a dark cloud candlestick patterns appears in a price level that different components of Ichimoku formed a triple peak there in the past. As always, you can count on stochastic and different types of divergences to help you with your analysis. And you can also look for spikes in the volume and use them in your favor. In the end, this pattern is confirmed when the next candle closes below the low of the bearish candle. But in this case, the next candle is a spinning top. So we wait and go short after the completion of this red candle and put our stop loss above the pattern. The next candlestick pattern is called inverted hammer, which you briefly got acquainted with at the beginning of this video. It exactly looks like a shooting star unless it appears at the end of a downtrend and signals a possible trend reversal. The color of the main body doesn't matter much, but it's better to be green. Like a shooting star, the length of the main body is small compared to its upper shadow, and there is no lower shadow. In this example, you can see that we've been in a long downtrend. Then the market begins to form an inverted hammer, and after that we notice a very long and powerful bullish candle that confirms the inverted hammer. And at the same time gives us another very strong bullish candlestick pattern that is called Morningstar, that we will talk about in the next video. As always, you can use other confirmations to add more strength to your analysis. Finally, this pattern is confirmed when the candle closes above the high of the inverted hammer. But here, because we also have a Morningstar pattern, I strongly recommend you to wait and go long after a candle closes above this bearish candle, which confirms both of these patterns. And finally, put your stop loss below the inverted hammer. In the end, if this video was useful to you, please support us by pressing the like button. And don't forget to subscribe and press the bell button to be notified of new videos. Till next time.